The truth is that this bull run is different from every other Bitcoin bull run in history. In 2013, 2017, and 2021, the Bitcoin halving happened before Bitcoin broke past all-time highs. Today, Bitcoin has already broken out past its previous all-time highs, and we are still a few weeks away from the next halving. Why is this the case? Well, the most obvious reason is simple supply and demand. Let's say you and I want to buy some Bitcoin. We have two options. We can buy it or we can mine it. Similar to how we mine gold, silver, and other precious metals, Bitcoin is dug up, so to speak, using computers that solve complex math problems. If your computer gets the math problem right, it gets rewarded with new Bitcoin. So just to be clear, this is an incredible oversimplification, but that's okay. We don't need to know exactly how our cars and computers work internally to be able to make them useful. Same goes for crypto. And I'm willing to bet most of us aren't here for the tech or to opt out of the existing financial system. We're here to YOLO our life savings in and get disgustingly rich overnight with zero work. Go ahead and tap that like button if you appreciate the honesty. Hi, I'm Raj. On this channel, we talk about money. So since the approval of the Bitcoin ETFs, institutions have been buying up Bitcoin in order to get their hands on it, similar to buying up gold instead of going through the trouble of mining it themselves. This is because institutions like BlackRock, Grayscale, and others that offer exposure to Bitcoin in the form of ETFs aren't doing this out of the kindness of their heart, and they're not here for the tech or the future of finance or any other reason you might have heard, well, other than they want to make a profit. They need the asset to be able to offer their Bitcoin ETFs to customers, so they can then charge a fee to their customers to manage it for them. This is a product, and the fastest way to get that Bitcoin is to buy it. Approximately every 4 years, the amount of Bitcoin that gets distributed to miners as rewards gets cut in half. This event is known as the halving, and the next one is expected to take place somewhere around mid-April of 2024, so this is coming up really soon. So at the time of recording this video, it's estimated that roughly 900 Bitcoin are mined each day, and after April 2024, this would turn into about 450 Bitcoin a day, assuming no other variables change. So because Bitcoin has a fixed supply of 21 million, and cutting the rewards in half means you limit the supply becoming available, assuming the demand stays the same, logically this means number go up. Institutions know this, and because they want Bitcoin and because they're competing against other institutions and retail investors as well, this is why we're seeing this breakout happen pre-halving. Generally speaking, the idea is that because this halving event takes place every 4 years, the price of Bitcoin can be predicted to go up in a repeating pattern based on its regular supply cuts. So this leads us to the 4-year model for Bitcoin: 3 years of upward price action and 1 year of downward bear market misery. This of course went on 2 more times for Bitcoin in history, which leads us to today, which it looks like we're in a 4th period of upward price action. So we can see the overall concept is really simple. Every 4 years, Bitcoin hits a new all-time high, and so far, if you wanted to make a bunch of money in the crypto space, it has just been as easy as waiting for a bear market, buying when it's super boring, and waiting some more than selling for max profit. It seems like institutions have caught on to this and are front-running the supply cut. So we've already seen what happened with the price of Bitcoin. So what does the having an institutional buying of Bitcoin mean for altcoins? Well, generally speaking, Bitcoin still controls the crypto markets. It is the largest crypto by market cap. When it goes up, more money can then flow into Ethereum and all the other coins as well. So in general, the more money in Bitcoin, the more money in crypto, the more money in altcoins. And based on my own experience being in the markets a few market cycles now, the money typically flows to Bitcoin first, then to Ethereum, then it flows into mid-cap and small-cap cryptos. This is of course the general trend. There are always exceptions. Now of course, it's not just institutional buyers stepping into the markets this time around that's causing this bull run to be different than the others. In the previous 3-4 year periods of Bitcoin price action, interest rates were near zero, which meant that the markets were flush with nearly free money. So there was plenty of appetite for risk. Today, interest rates are significantly higher than previous bull runs, and reportedly there is literally trillions of dollars of money on the sidelines as a result, which makes sense. If the government is giving people a guaranteed, let's say 5 to 6% return, it's a pretty obvious choice to park some cash in safe government-backed investments. So with this data in mind, I'm not necessarily worried the Bitcoin bull run is coming to an end soon, despite Bitcoin behaving a little differently than the previous 4-year periods. I personally believe that $100,000 Bitcoin and beyond is still on the table this run based on institutional demand, the Bitcoin halving, and speculation alone that interest rates will come down and free up money on the sidelines. And if rates do come down, some of that money should flow into crypto. But price speculation is one thing. It is very obvious that the timing of this bull run is different. So if we're using the previous 4-year periods to guess when this bull run will end, we will likely get misled given that this time is objectively different. We as investors should remember that the biggest biggest variable in our market is the market participants themselves. Humans can be wildly unpredictable at times, but I personally do not believe that humans have changed in any major way in terms of how we behave on a large scale. And this applies to our markets, crypto included, which means we can use history as a guide. We just have to have the right investment to look back on for comparison, which in this case might not necessarily be what happened with Bitcoin in the past. Bitcoin at one point in time was a new novel idea. But as things become more mainstream and adoption occurs, the behavior of an investment from a price perspective will change over time. So in my research, to see if there was any clues to how this may play out in the history of the markets, I found this article titled "The Bitcoin 16-Year Cycle and Its Correlation to the Internet Bubble" by Jiren Van Lang for Bitcoin Magazine. This is a comparison of Bitcoin, a new asset, compared to the internet, also just a few years ago, a new idea. The article introduces us to the idea of a larger 16-year cycle combining the previous 3 4-year cycles with this current 4-year cycle we're in right now. So a key finding from the article is the comparison of the S&P 500 during the dot-com boom and the Bitcoin price chart. I cannot deny the similarities for the first 3 4-year cycles: 3-year bull phase, 1-year bear phase. And quoting directly from the article, this really spiked my interest as both periods are based on the adoption of a completely new technology that shifts the way our society perceives and uses information. The personal computer and the internet changed our lives completely, to the point that it's almost unthinkable to be unconnected to the internet for more than 24 hours. In the future, it will as well be unthinkable to not own and use any Bitcoin. We're just still in the early phase of its adoption, which just nails why this is incredibly useful data. Bitcoin has supposedly been declared a dead investment almost 500 times, and yet here it still is. I don't personally know how Bitcoin will fit into the existing financial world in the future or our recommended investment portfolios, but it seems that the adoption of Bitcoin and the asset class is here. This isn't a new idea anymore, so it makes sense that the price behavior might deviate from what we've experienced before. So now we need to really hone in on the last 4-year cycle from these charts, which is where we are today. From the article, the S&P 500 and the Microsoft chart shows that in both cases, the last 4-year cycle of the greater 16-year cycle experienced an accelerated price growth, peaking about midway through the cycle, and then experienced a prolonged bear market, which means that it is very possible that this pre-halving rally could be the early part of a market cycle top, and we will be entering a prolonged bear market after the highs come in, based on what happened historically to the S&P 500 during the dot-com era and what happened with Microsoft as well. So Bitcoin is trading under $75,000 at the time of filming this video, but I still think $100,000 Bitcoin is on the table, with significant pullbacks in between legs up. Of course, take that with a grain of salt, because I really have no idea how high prices will actually go or when the top will come in, which begs the question, is history going to repeat or rhyme? Will the traditional 4-year cycle be maintained, or is this part of a greater 16-year cycle? Well, we'll all just find out together. What I do know is that I am terrible at calling the bottom, which means I have almost no chance of calling the top. So I'm sticking with my exit strategy, with my speculative crypto plays, which is largely dependent on the price of the coins themselves, not necessarily about the timing of the market cycle this time around, and the data that I presented in this video supports that strategy, since the peak may be coming in earlier this time around for a mid-cycle peak with an extended bear market to follow. Did this data change your mind about your exit strategy, or are you sticking to your original plan? And I'm also curious about how high you think Bitcoin will go in this bull run, and when do you think the top of the Bitcoin market will come in? Let me know your thoughts in the comment section down below. If you found this video valuable, be sure to click the like button, subscribe for more content. Good luck in the markets, and I'll see you in the next video.